Today in Financial Literacy, we're going to talk about credit card finance charges and minimum payments. Typically, when you see a credit card statement, it has lots of numbers in it. It includes the purchases that have been made in the month, the previous balance, what you didn't pay off the previous month, any finance charges or other fees. It has a total amount that you owe, a minimum payment that you need to make to stay in good standing, and then we also have an unpaid balance. And the problems that we're going to do, the purchases and possibly the previous balance, are going to be given to you in the problem. The previous balance you might have to find from the previous month if you're doing a multi-month problem. The finance charge is going to be a calculation you're going to do. It's a percent calculation that uses multiplication. Total amount owed is a simple addition problem. Minimum payment, like the finance charge, is a multiplication calculation using percents. And then finally, to get that unpaid balance, you're going to do a simple subtraction. So let's look at the finance charge first. The finance charge is really the interest that is being charged to your credit card on any amount that you don't pay off at the end of the month. They don't call it interest, they call it a finance charge. If you pay off your balance at the end of the month and your balance is zero, then 0 times whatever finance charge percent is going to be 0. So there won't be any charge at all if you pay your bill in full when you get the statement. We calculate the finance charge by taking whatever we owe, the unpaid balance, at the end of the month and multiply it by the monthly interest rate. Now, they don't publish the monthly interest rate, so we're going to have to calculate that as well. But that's a calculation you just have to make once and then use that same number over and over again. To find the monthly interest rate, you take the annual interest rate, the APR, and divide it by 12 because there's 12 months in a year. And that'll give us how much gets charged per month. Here's an example that we can look at for calculating the finance charge. Jennifer charged $800 on her credit card this month, but she was only able to make a payment of $150 when the statement arrived in the mail. If the card charges an APR of 29.5%, how much is the finance charge going to be on our next statement? So we need to find some things in here first, but our equation is going to be the finance charge is equal to our unpaid balance times that monthly percent rate. The unpaid balance is going to be $650 because we take that $800 that she charged minus the $150 payment she made, and that'll give us $650. The monthly rate is going to be 0.02458, and that we got that by taking the 29.5% interest rate, dividing it by 12 to give us that monthly interest rate, and then to convert the percent to a decimal, we have to divide it by 100 again. You could also just take the 29.5 divided by 1,200 and it would be the same thing. So once we have these numbers here, $650 times the 0.02458, we just plug them into the calculator and we get $15.98. Now remember, this is a dollar amount here, so you're going to have to remember to round to the nearest penny. But you don't want to do any rounding until you get to this last step. For example, don't take that monthly rate and just say it's 0.02 because you won't get the right answer for the finance charge. You may be only off by a penny or two, but if you're going to do that over multiple months, that error is going to increase every time that you round. The next item is total owed. Total owed is the total that you owe. So that's going to be any purchases you make in the month, any balance that you carry over from the previous month, and any other finance charges, fees, and other things that are added onto your account. If we look back at that table that we had previously, you could see that the first three amounts there, purchases, previous balance, finance charge, you just need to take those three and add them up. And the result, the sum, goes into the total owed, which is right below it. The biggest problem that people make when they're doing these problems is they forget the purchases. They'll take previous balance plus finance charge to get total owed, and they forget the purchases. You need to remember that you have to add all three of those to get the total amount owed. Minimum payment is the smallest amount of money that you have to pay in order to stay in good standing with the loan company or the credit card company, whoever has your credit card. Good standing means that you can continue to use the card and you don't have any late fees or other things added onto your statement that will also lower your credit score. If you make your minimum payment, there will still be a finance charge added on, but that's not going to lower your credit score unless your account gets to be too much. When we talk about minimum payment, it's based on two options: a percent of the total amount owed or a dollar amount, and it's whichever is higher. So it may say something like you need to pay 2% of the total amount owed or $20, whichever is higher. When we're looking at the problems that we're going to do, you're given the minimum payment percent. Just like you're given the annual percent, you're given a minimum payment percent. And you need to make sure that you don't mix those percents up. And this minimum payment percent, you just leave as it is. You don't have to divide it by 12 because that's the percent that has to be paid each month. So let's look at an example here. Jennifer owes $650 on her credit card. It has a minimum payment percent of 5% or $20, whichever is more. How much is she going to have to pay to stay in good standing? So once again, it's a simple multiplication problem. Our minimum payment is going to be the total amount that is owed times that minimum payment percent. And once again, we're going to have to change that minimum payment percent from a percent to a decimal. So for the problem, we can see that Jennifer owes $650. The minimum payment percent is 5, so we'll change that to a decimal by dividing by 100, and we get 0.05. And we plug 650 times 0.05 into the calculator, and we get 3250. Actually, we get 32.5, and you're going to have to add that trailing zero on there. Now we have to compare that to the dollar amount. 3250 is higher than $20, so that's the amount that she's going to have to pay. Let's just say in this example that it came out to be $12.50 instead of $32.50. Then her minimum payment would be $20 because the minimum payment is 5% or $20, whichever is higher. The unpaid balance is a simple subtraction problem. If we owe so much and we make a payment, then we're not going to owe as much. So we just have to take the total amount owed minus our minimum payment and put that amount in the unpaid balance because that's what we still owe. That unpaid balance becomes the previous balance for the next month. So if at the end of January I had an unpaid balance of $300, then that automatically is going to go into the previous balance for February. So if we're going through multiple months here, you're going to use the unpaid balance from the month before instead of having that be supplied to you in the problem. Okay, so that's it for the lesson on calculating finance charges and minimum payments. There is an activity in Schoology for you to do based on this. You're going to have to calculate the charges for 4 months, January through April, and the purchases are in a table that you'll have to add all the purchases up to put into purchases. It gives you the finance charge percent, the annual one, you'll have to divide by 12, and it gives you the minimum payment percent. The rest you should be able to calculate out and do. So good luck on that, and don't forget to take the exit quiz when you're done with the activity.